Whenever we discuss about investing in gold, the name that comes first is sovereign gold bonds or SGB. 8 years ago, when the first series of SGB was launched, the price of 1 gram of gold was Rs 2,684. Now, it is at the level of 6,000 rupees. So the bonds have provided an annual return of 12% including interest. Due to its various benefits, SGB is proving to be an excellent option for investment. However, many people are unaware that by investing in sovereign gold bonds issued by the RBI, you can also take the benefit of loans. The bonds can be used as collateral to easily obtain a loan. Almost all banks and non-banking financial companies are providing a loan against SGBs. The rules and regulations for loans on SGBs are quite similar to those for gold loans. Most financial institutions offer loans up to 70% of the bond's value. The price of gold is calculated based on the average of 24-karat gold as disclosed by the Indian Bullion and Jewellers Association. Banks offer loans on SGBs to the tune of 20,000 rupees to 25 lakh rupees. According to the SBI's website, there are two types of loans on SGB, term loan and overdraft. In case of term loan, the loan amount is transferred to the bank account on day of application. In overdraft, the loan amount can be used as required. The interest is levied only on the amount that is used. Other banks too have similar rules. Loans on SGBs fall under the secured loan category, so it is cheaper than personal loans. SBI levies an annual interest of 10.55% on SGB loans. Union Bank charges anywhere between 11.15 to 11.55% and Indian Bank offers a rate of 9.05 to 9.90%. The interest rate of private sector Federal Bank is 12.5%. All institutions levy processing fees on SGB loans. SBI levies 0.5% of the loan amount or Rs 500 as processing fees, whichever higher. Remember that there may be differences in the processing fees charged by different banks. Now let's understand what is the process for applying for this loan. The process of taking a loan on SGB is quite simple. Unlike education or personal loans, there is no need for excessive paperwork. There are no restrictions on the use of the loan amount. You can use it for any purpose, whether it's for your child's admission or a medical treatment. Some banks like SBI offer loans only on the bonds they have issued. The loan can be obtained from the same branch where the bond was purchased. While you can get this loan with the Indian Bank on pledging of the SGB, or you can even pledge SGB holdings in your demat accounts, it is essential to have a bank savings account to apply for this loan. You can easily get it against your demat account holdings or the physical certificate of your SGB. Regarding the repayment of the loan, most banks including SBI are offering term loans for 1 year. While overdraft facilities are being provided for 3 years, if you opt for a term loan, you must repay the loan amount along with the interest at the end of the period. In the case of overdraft, the interest must be paid on a monthly basis. Upon full repayment of the loan, the papers related to your bond will be returned to you. The good news is that most banks, including SBI, do not impose any penalty for prepayment or early repayment of the loan. If you have invested in sovereign gold bonds and suddenly need money, taking a loan against these bonds is a good option. There is a significant difference in the interest rates of banks and financial companies, so compare the rates to save a considerable amount in interest payments.